So I just got off a call with a Swiss private banker. This is someone who's been in the industry for decades. He's worked with big name banks like UBS, Credit Suisse, and now he's at a private bank in Switzerland catering only to high net worth clients. We talked through a number of different cases, and one of the cases that we discussed in particular was a gentleman from Canada, a Canadian citizen, Canadian resident, very wealthy. Now, I'm always keen to better understand why people choose to bank in a specific country, especially when they are from a high tax country like Canada. So my follow-up question to this banker, it was pretty simple. Why did this Canadian resident decide to bank in Switzerland? What was the catalyst? What were his reasons? Well, my banker friend shared 4 reasons, and these reasons really hammered home why Canadians, Americans, Europeans, even Australians should consider banking in reputable private banking hubs. So I wanted to make a video and share these 4 reasons with you right now, starting with reason number 1, which is access to financing. Now, this might sound a bit surprising. Most people, they don't think about accessing financing through Swiss private banks, which is exactly why I wanted to address it first for you right now. You see, one of the biggest advantages and most attractive tools that private banks extend to their clients, it's financing. And that's because private banks can get creative with loans and do things that your standard retail bank just can't do. Plus, they move faster and they often offer better terms and rates to their clients. This takes the form of Lombard lending, asset-backed financing, and securities-based loans. Basically, this just means you get to keep your money invested or in cash and then take out debt from the bank in order to cover your expenses, invest, purchase other assets, or basically do whatever you want with it. Now, as a quick example, let's say you have $5 million invested in your account at a private bank. In most cases, you can take out between 70 and 80% of that balance as a loan from the bank for a very small fee, usually around 1%. But your original balance, that's going to stay invested, meaning you don't miss out on appreciation or, maybe more importantly, get taxed when you sell off any of your investments. So if you already have some wealth, say $1 million or a few $1 million invested, placing it with a private bank that can then lend it back to you for a small fee can help you unlock significantly more value from your money. Of course, this does take careful planning and consideration, which brings me to the second reason that you might want to consider using a private bank if you live in a high tax country. Thoughtful planning. Now, what I'm talking about here, it is going to touch on legal, accounting, and even tax strategy. But this is an advice. Talk to an advisor before you make any decisions for yourself, and of course, do your own research. And while everyone's case is going to be different, there are 2 very important points that everyone does need to consider. The first point is that your accountant who's sitting in your hometown probably doesn't understand or even care to consider international tax treaties, international structuring, or how to help you minimize and optimize your taxes to the greatest extent possible. On the other hand, many private banks, they help their clients by providing advisory services across all of these areas of expertise, either directly through in-house counsel or through external advisors that they retain for their clients. This might include tax planning, navigating nuances of international tax treaties, structuring, even estate planning, and in certain instances, helping you overcome complex family situations. And that brings me to the second important point that everyone needs to consider. Don't rely solely on private banks for advisory. Yes, private banks can often provide better support than a local advisor from your hometown, but they aren't a silver bullet. And you need to vet every provider that you ever consider working with, whether they're introduced by your bank or they just happen to work in your local community. And whenever someone contacts us and asks for a private bank that can also help them navigate structuring, tax optimization, and other advisory related services, we always suggest that they also find external advisors who specialize in their specific country of citizenship, residency, and any other relevant countries in terms of business and investment interests. This is especially important if you're new to this world of internationalization and going offshore. Say you just inherited money, or you had a major liquidity event like selling a company or real estate after significant appreciation. Whatever the case, you should get advice from qualified parties to make sure your plans are solid, and some of that advice can come from private banks. Now, a quick reminder. We're still talking about the reasons why Canadians, Americans, or Europeans might consider private banking in a place like Switzerland. And the next reason that my banker friend shared was security. This is pretty straightforward. At a time when most Western banks are overexposed to retail and commercial borrowers and reliant on federal deposit schemes to shore up confidence in their balance sheets, Swiss banks, at least the good ones, are rock solid. And that's because Swiss private banks don't lend, at least not in the traditional sense. Yes, they'll let you borrow against your own capital, but they're not underwriting a mortgage using depositor funds. In the words of the banker that I was just speaking with, Swiss private banks are primarily in the business of investing, not lending. So capital allocations are going to be significantly more conservative, and investments made by Swiss banks tend to be more liquid, either in equities, foreign currencies, or short-dated notes. The point is, Swiss private banks are liquid, which is more than you can say for most banks around the world. And that means they can offer significantly more security to depositors, meaning people don't have to worry about their money being exposed to unexpected risks in the same way that they do when banking in their home country. Now, the fourth and final reason that this banker offered up was one that you've probably thought of yourself. But before I share this with you, if you've made it this far in the video, don't forget to like and subscribe so you get notified the next time that we post videos just like this. Okay, so the fourth reason for considering Swiss private banking, if you live in a high-tax jurisdiction, is diversification. Now, obviously, there's a lot of different reasons and ways to diversify. You can diversify your portfolio, your investments, you can diversify for currency exposure, and of course, you can also diversify the specific jurisdictions, political systems, legal frameworks, economies, and even politicians who can hold you and your money hostage. That way, you don't need to worry if your accounts in a single country are frozen. And in this way, a private bank account in another jurisdiction, it's a form of banking insurance, making sure you can access your money no matter what happens. And when it comes to choosing strong and suitable jurisdictions for your profile, reputable banking hubs like Switzerland are very attractive alternatives to places like Canada, Australia, the United Kingdom, the European Union, and even the United States. But there's still a big looming question that you do need to answer before you can bank in Switzerland or any other jurisdiction, which is, can you qualify to open an account? And the fastest way to figure out if you qualify is by completing an assessment over at globalbanks.com/apply. Our team will review your profile, review the information you provide, and get back to you within 24 hours, confirming whether or not you can bank in Switzerland. And if you can't qualify to bank in Switzerland, we'll even share a few different countries that you might want to consider instead, 100% free. So go ahead, go to globalbanks.com/apply or click the link in the description below. And when you're done, make sure you come back here and click this video. In it, I share why 70% of the people watching this video should avoid banking in Switzerland altogether. So go ahead, click the link in the description, fill out your application, and then come back here and learn why you may be one of the 70% of people who should look at a different country altogether. Thanks for watching, and I'll see you in the next one.